Will be on the GST meet as the council takes a decision on the announcements made by Prime Minister Modi during his Independence Day speech. Now, the street is pricing in a $13 billion consumption boost if slabs are rationalized, leading to tax cut and demand boost. Let's go across to Prakash Priyadarshi to understand what are the major announcements that are expected. Prakash.
The much-awaited two-day GST Council meeting begins today, and before that, the opposition ruled states are holding a very crucial meeting. In fact, they are drawing their strategy before the GST Council meeting. They have raised their concerns about potential revenue loss after implementing the centre's proposal. In fact, they want a clear framework to compensate them in case of potential revenue loss. You are aware that the GST GUM rate rationalization has already accepted the centre's proposal for two-rate structure, essentially 5% and 18%. In fact, proposal for doing away with 12% and 28% slabs has also been accepted by the GST GUM. And therefore, states have raised their concern to compensate them in case of revenue loss. Along with that, a 40% slab will be created for same goods and luxury items. 99% of items under 12% slab will come under 5%. Items under 28%, like cement or some other items, could be shifted to 18% slabs. Luxury cars, bikes, pan masala, tobacco to attract 40% GST. There is a separate proposal where some states have raised their concern and demanding government to levy additional duty beyond 40%, especially on sin goods, to compensate them. So these are the proposals which is there before the GST Council for deliberation. It's a mega, it's going to be an extraordinary meeting, complete overhaul expected in GST after 8 years of its implementation. And we are expecting some significant announcement.
Okay, Prakash, thank you so much for taking us through all of those expectations that the street is factoring in. Of course, this GST meeting that's underway is going to be very important to watch out for today and tomorrow. But let's also listen in to the host of experts and industry leaders about what they are anticipating from the big GST reset.
It's quite positive, and generally it should be more positive for consumer discretionary, but in general it's going to be positive. And fact that we are having a dual benefit of interest rates coming down as well as tax coming down, so both should only contribute positive in terms of consumption growth. So, and we've been quite positive. There's a lot of negativity, pessimism around in the market, and despite that, markets are holding on. That clearly shows that there's quite a bit of resilience, and the current ongoing tariff situation may not last for very long. And once that settles down, I'm sure we will see reasonably good run in the markets.
We do see that the lower end of the consumption and the mid end of consumption will see a benefit. Coming to a specific question on the sin goods, now there are two parts. One is on the cigarettes. We see more of a bucket reclassification. So currently there is a 28% GST, and then there is a cess, and there are more taxes. What we see is 28% obviously moves to 40%, and then the cess gets reclassified under another name. Overall, we see largely status quo, maybe slight increase can happen. On the aerated drinks, again, it's a 28% plus 12%. So it's already at 40% overall. So we don't see any significant change there. So net-net, except these one or two segments where maybe a status quo will be there, lot of other FMCG, especially Bikaji, 70% of the business at 12%, Imami 60% at 12%, Dabur 24%, Nestle 25 to 27%. These could be the beneficiary. And if the soaps, detergent, etc., they also get classified, toothpaste gets classified as essentials, and they get taxed at 5%, then Hindustan Unilever, Colgate also will benefit.
We do close to 20,000 cars in India, but in the global scheme of things, we do 1.8, 1.9 million cars. So there is still a lot of runway to go. We saw August a bit muted, but when you look at inquiries, consumers wanting to buy cars, there is still a lot of pipeline. They are all waiting for the GST announcement. We could see a significant demand from the 22nd till 31st of October. We have also incidentally announcing our own retail, a festive campaign today. It's called the Dream Days. This campaign enables consumers to buy Mercedes-Benz cars at not only lower EMIs but even deferred EMIs. So there are many new products, financial products that we are introducing this festive season for consumers to shift into their dream car as a Mercedes-Benz, be it a Merc or a Benz.
See, again, if there is just saying that if there is a 10% GST cut, like for two-wheelers, broadly, it's across most of the segments, it is less. For less than 350cc segment, it is 28%. And if it moves to 18%, broadly, there will be 8% price reduction, which will be effective on the day the new GST rates are implemented, because this is an assumption that OEMs will pass on, and very unlikely that they'll not pass on. So there will be a 8% price cuts that will happen. And obviously, given that it is around festive period, we should see a very, let's say, a decent surge in the volumes in the subsequent days. But on a broader basis, if I may say, let's say from a 1 year perspective, assuming that the lower prices remains, 8 to 10% price cuts remain, we do expect at least elasticity to be anywhere between 50 to 70%. So at least in terms of full year expectations, at least we should see 5 to 7% positive impact on demand across categories depending on the GST rate changes to happen in terms of volumes for the domestic market.